Hi all, I wanted to make a quick video. I'm going to call this new series the 125 series. And before I begin, I would like to mention that this is an educational channel. All content over here is for the sake of education. Kindly read the disclaimer on the screen and in the description below. With that said, let's proceed. So the reason I'm calling this the 125 series is, as I've mentioned earlier as well, that our indices in India, when you convert the hours and the minutes, it starts at 9:15 a.m. and ends at 3:30 p.m. That is exactly 375 minutes, if I'm not mistaken. Just give me a moment. I'll recalculate that. It's 375 divided by 5 is 75, correct. So it's 375. If I want to divide that into 3 perfect halves, I get 125 minutes. So the Indian index, Nifty, Bank Nifty, Fin Nifty, Midcap Nifty, they work exactly for 375 minutes during the course of a day. If you convert everything into minutes, that is 375 minutes. If we want that in 5 perfect candles, it's 75 minutes. And if you want that day in 3 perfect candles, then it's 125 minutes. I've done a similar logic for commodities also, like crude and natural gas, but I shall discuss that in some other video. In this video, we shall stick to our indices, and this can be applicable to stocks as well because they are also trading in the same time frame. All right, so on my screen you see Nifty 50, the spot chart. The time frame is 125 minutes, which is nothing but 2 hours and 5 minutes. And as I mentioned in my Telegram note, and as I have been saying last couple of days, whether I trade intraday or not, I want to have a slightly longer term perspective of things moving forward. Trading intraday has been good, but we are not getting any younger. Intraday trading is very stressful. You got to keep your eyes on the screen most of the time. You don't know when the opportunity will come, especially if you're an option buyer. We wait for that spikes to make good amount of money, and you really don't know when that spike will come, when that gamma blast will come. Whenever it comes, it makes. I'll give you a small example. I wear glasses to when I'm trading, and the power is going up, and so I thought, instead of my eyewear power going up all the time, I should focus on reducing the stress on my eyes, my brains, as I'm not getting any younger, right? So the idea is to be profitable, but be a little more relaxed compared to intraday trading. We will trade intraday also. We will take an opportunity whenever it comes, but our overall view will be slightly long term. All right, we will try to look at things from a weekly or a fortnightly perspective at least, or a monthly perspective at least. Let me start this video. I think you will get a fair idea of where I'm heading. All right, so this is a 125 minutes chart. Every 3 candle makes a day. So this over here is 2 days, this is 1 day, this over here is 2 days, and this over here is 1 day. All right, every pair of 3 candles makes 1 day. Now on Dhan you also have volume candles available. So if you want to see strength of each candle, you can switch from normal candles to volume candles. It shows you the strength of each candle. This is very important, specifically in shorter time frames. You will get to see the strength of candles. When you're trading shorter time frames, you can see over here this sell was pretty strong, and then the highs. So anyways, all I'm saying is there are volume candles available, which was not available earlier. Now Dhan also has got volume candles. All right, now let's get on to the indicator. This is the first proper 125 minute time frame video that I'm making, so I really want you to take keen interest on this and focus on all the things that we are going to be discussing. The core of this particular video is this particular indicator called multi-oscillator adaptive kernel. We are using it in the default settings. There are absolutely no changes. I'll just reset it for you and show you that we are using it in default settings, or I may have unticked this 2 at the bottom. That's about how much I would have changed it. I don't recall changing anything else. I have left it in the normal settings. I think I've probably just increased the size of this line from 1 to 4 and the size of this line from 1 to 4 because it's more visible, and I've unticked these 2 at the bottom. But apart from that, I don't recall making any other changes. You can pause my video over here and check the settings. I think these are all the settings that it comes with. I have not changed anything in the input. In the style section, a year from thickness 1 I've changed to thickness 4, and here from thickness 1 I've changed to thickness 4. Apart from that, I've unticked this 2 at the bottom, and I don't recall making any other changes. Apart from this, the only other indicator that I'm using that you require actually, and I want to limit this video to 2 indicators, but I will use a third one which I will leave as an optional because it's just going to provide me borders. So the second main indicator in this is something that we have been using for some time. It is the double CM-EMA trend bars that we have recently discovered. It looked like this with that. Again, we are using it in the we have made some color changes, and I don't know what settings it comes with. Maybe it comes with 20 and 50. I'm not too sure. I think so. Reset. It comes with 50 and 100. We don't want to use that. We are using 13 and 34. The normal CM-EMA trend bar comes with 34, and then over the last month or so, Dhan introduced a zero lag indicator which was working on EMA 13. And from that time onwards, I've started liking that. So I'm using EMA 13 and EMA 34. When my moving averages are going up, it is shown in fluorescent green. When it's coming down, I show it in purple. I don't use red. Instead of that, I use purple because that way sometimes it looks a little different compared to the candles. But in this case, I've made these changes. The thickness is 2 all over the place, and the main change is this. Colors you can change it to any colors you want. The first EMA is 13 and the second EMA is 34. Now the candles over here are getting the color from the multi-oscillator kernel. See, this bar color is available over here. This indicator at the bottom is even coloring the candles on top. If you don't want the coloring, you can just untick this and it will take out the bar coloring from top. I'm leaving it for the time being. I don't mind it. But if you don't want to see the bar being colored, over here, go to multi-oscillator adaptive kernel and just untick this. Then you will see normal colors on the candles and nothing else. All right. I'll keep it ticked for this particular video because I don't mind seeing them for this particular example. And the only other indicator that I'm using for this is the RSI, which I'm just using for borders. People who have been watching my video for some time now, they know that I use RSI only for borders. I don't use it for RSI. I don't use it for RSI moving average. I only keep it for borders, which is 70 at top, 30 at the bottom, and 50. I make a blue line in the center. Only these 3 are ticked. Everything else is unticked. Input I don't mess because I don't need anything. In the visibility, I've only kept the upper band, lower band, and the middle band, and I've unticked everything else. So for me, this RSI is only working as borders. If you want, you can also use it. Otherwise, if you're just restricted to 2 indicators, you don't have to use it. RSI for borders is optional over here, and you can merge it with the multi-oscillator adaptive kernel. How to merge it, I've explained in many videos. In fact, I'll go ahead and do one now itself. So my RSI by default, if you see, only comes up with borders, top, bottom, and center line. I don't use the RSI. So now what I'll do is I'll tell this multi-adaptive oscillator to move down to the existing plane below. And then I'll click on this 3 dots over here again and tell pin to scale, no scale full screen. And that's it. The RSI and the multi-oscillator adaptive kernel have merged. All right. So I'll write it down as an option. If you have the paid version of TradingView, you can also use the RSI only for borders. If you're not having the paid version and you're on the free version, and if you're restricted to only 2 indicators, then I would suggest use the multi-oscillator adaptive kernel along with the CM-EMA trend bars, the new version that we have found from Chris Moody. Use that. I'll leave the name of the indicator and the author name in the comment section and pin it so that you have no difficulty finding it. Now let's get on to the logic of this particular indicator and why I'm using it. As I said, I'm trying to move from 5-minute time frame, even though I may trade in the 5 minutes time frame, but I want to have a slightly longer, market outlook when I'm doing things. That's why I've started analyzing things, especially indices on the 125 minutes time frame. Now this is very simple. Over here you can see the at the bottom from green it becomes bluish, all right, and this moving average kind of a line also is going on top. Over here you see both the purples come, they cut into this intersection and both of them turn green and the markets start shooting up. Over here you get this moving average line at the bottom also going up and this blue kind of a wave also coming through. You should exit when this top line starts bending, all right. You can have any kind of rules that you want in this kind of a trade. You can say over here, once you have 2 blue candles you will enter the long, or if you have 2 red candles you'll enter the short. Whatever rules you want you can set for yourself, but basically it's just telling you what to do on screen. Over here you see the blue at the bottom turns into purple. The moving average line, it's actually called over here, it's called this zero line. One second, it's not called the zero line, it's called the signal line. The signal line, which we are using the strength for, the signal line has already cut into the body and the signal line is cutting in and coming first before the wave is coming in, right? So the signal line is always one step ahead of the wave. So when the signal line is cutting in over here, you should understand that the market is turning from bullish to bearish, and here the signal line cuts it and here the wave cuts it, all right. So here you get the confirmation that okay, it's going to be bearish. Here is where you should have shorted technically. And then instead of working on that, for that 1 spike, 2 spikes, let's hold it, man. Even if you have to go overnight, keep a stop loss and hold it. What do you have to lose? The idea that I'm trying to implement over the next couple of days is generally my quantity is a little high. I trade somewhere between 300, 600. At times I even jump to 800. But now I don't want to take that amount of risk intraday. I just want to take one lot, buy it and leave it with a stop loss and a target, and when I'm selling, sell it, leave it with a stop loss and a target. Let's see how much it can go, maybe carry it for a day or two and get over it. I don't want to be staring at the screen all the time. At least for some time I want to do that, because right now I've looked at the screen for so long, for so much time, that the eyes are really stressed. The brain feels fatigued. So in this summer vacation, I also want to take a vacation and take things a little easy. That's why I'm moving to the 125 minutes time frame. And when I've done that, I found these 2 indicators to be a perfect match for the kind of things that I was looking for when I was trying to make this switch. This combination of the double CME trend bars on top and the multi-oscillator adaptive kernel at the bottom is a match made in heaven. You can see the way it's working. It is absolutely smooth. Over here also you see first the signal line is taking a turn and then the wave is taking a turn. The signal line is turning here itself at the bottom. I wish I could make it darker, but the problem is they have not left any option for you to be able to change the color intensity. There's no option over here, so we can't change the intensity of the color. So I hope it's visible. You see the signal line is changing here itself. The market turns, even though it's telling you to go long over here, because here it waits for the wave to come into the blue, but the signal line starts turning first. So there are 2 things happening at the bottom. First is the signal line and then is the wave itself. The signal is always one step ahead of the wave. As long as you remember that and go with the flow on top, that is, if both the lines are green, you will go long. If both the lines are purple, you will go short. Match that with the bottom and you're done. All right, that's it. Don't break your head too much and you're done. And you should have, when you're trying to trade on higher time frames, it's quite obvious that your stop losses also will be a little larger, but I don't mind having a 100-point stop loss. What do I have to lose? If I short one lot Nifty, that's 75 rupees. Even if I set a target of like 100 for stop loss, it's 7,500 I'll lose, right? I'm okay with that. If I'm going to make more than that, if I'm going to make like 125 points, if my target is 125 points plus, which is basically 1.5 times my risk, I don't care, right? Let there be a 100-point stop loss because I want to make 125 points anywhere on the way down. So I don't mind a candle. I don't mind something that looks like this. Let me just show you. If I'm taking a short position over here somewhere, I would want to carry it. This is now 1.8, 1.5 is still over here. It becomes 1.5. This goes all the way till about 2.5. But I will keep at least a target of 1.5. All right. So my target will look something like this approximately. Yeah. That's it. If I'm going long and if I want a long ratio, I'll take a trade somewhere over here after 2 green candles or blue candles, whatever you want to call it. And I'll take this higher. I'll take this target to how much? Why am I not able to see the percentage? Yeah, ratio, risk reward ratio, 1.5. I want 1.5, right? 1.5 is over here. That's it. Done. So you see both ways I'm getting about 1.5 ratio. Works. It just simply works. So instead of working on those minor spikes here and there all the time and getting your eyes and brains stressed all the time, let's at least take a summer vacation ourselves and go easy on ourselves for a couple of days. And this is the best way to do it. In the interim, I'm also devising a couple of strategies which are a little more intrinsic. The problem is I don't know how to put it across to you, so I'll need to spend some time to find a way where I can make it very easy in terms of explanation. For now, I could make this seem easy, so I've explained it. I hope you are able to understand the logic behind going and working on slightly longer time frames. Okay, these two indicators, mark my words, they are a match made in heaven. They work like a charm. And if you have the paid version, then use the RSI for borders at the bottom. If you're not on the paid version, if you have only 2 indicators that you can use free, then use the multi-oscillator adaptive kernel along with the double CMEMA trend bars. I'll leave both the names in the comment section and pin it, and I'm sure you'll have a great time putting this to use. Even if you don't really trade, just for fun's sake, paper trade with them and see for a couple of days whether they work for you or not. All right, no harm in paper trading with them, right? So the point is, relax for a couple of days. The market is a little volatile today. HDFC and ICICI Bank results have come out. Both have shown, I think, a 6% plus growth year on year. So I don't expect the Bank Nifty to go down from here suddenly, though I think a correction is coming. This is a bull trap in my view. It's going to take everybody up and then finally drop it, but we'll be ready when the drop comes. We'll wait for the signal line to turn over here. Like it turned over here, we'll wait for the signal line to turn. When it comes, we'll short it and we'll try and work on a risk ratio at 1.5. If not in Nifty, then we'll go Bank Nifty, and it's just 30 points. Even if you lose 100 points, it's 3,000 rupees, and you'll try to either lose 3,000 rupees or make 4,500 rupees. So that's okay there also. All right. So the idea is we will work in a relaxed fashion. We'll set a target, we'll set a stop loss, and forget it and go for a walk. All right. At least that should be the attitude. All right, guys, I hope you like this 125 series of mine, and I hope you give it the same love and affection that you've given to all other videos of mine. On that note, I'll end this video. Thank you so much for watching. If you're already a subscriber, consider becoming a member on the channel by clicking on the join button. It's only 89 rupees a month. And if you're an international viewer, it's close to $1 a month. If you are not yet subscribed to the channel, then please subscribe to the channel. Share this video with your family and friends. Also give our videos a like and a thumbs up. It motivates us to make more videos for you. Please subscribe to our free Telegram channel as well. The link is given in the description in all our videos. Members have access to our WhatsApp link. I will start becoming more active on the WhatsApp link from June, July this year. And also find our Amazon affiliate link given in the description. You can click on that and make your purchases through amazon.com.india, Amazon India. All right. So find our Amazon affiliate link in the comment section as well. I'll see you guys in the next video. Take care. Bye-bye. I hope you're having a good weekend. Cheers.